What's going on, YouTube family? Today we're going to be talking about the auto loan crisis and giving you guys an update. Now, it's finally hitting the mainstream news. People are talking about it, and I'm starting to get asked for interviews again on a lot of popular news stations. So stay tuned for that one. But I want to go over how we got here and some of the things that are happening. So there are a lot of naysayers saying that the auto loan crisis is not real. It's not happening. It's never going to happen, blah, blah, blah. So I'd like to turn the clock back to 2008 and talk about the housing crisis. Now, back then, they were doing a lot of what's called ninja loans, which is no income verification, no job verification. You just walk in there as long as you're breathing and you have a pulse. They would give you a home loan. And so many people were out there buying homes. I remember literally sitting at a PT's talking to a Walmart door greeter that had 3 homes here in Las Vegas. And everybody thought that the market could only go up and there's nothing wrong and nobody was talking about it. Just like today, there's nothing in the news. Now, the big thing is as the market started basically crumbling and people started losing their homes, nobody really talked about it except for the bankers. I remember my friend telling me explicitly, sell your home, get out of it, there's a bad thing coming. And so he walked around looking like the boogeyman. Nobody believed him, said, oh, stop being negative. Houses only go up, they never go down. It's never going to happen in a million years. And I remember watching CNN, Fox News, pretty much all these news stations reiterating the exact same thing. The economy is fine. There's nothing wrong with the housing market. Houses only go up. And then literally overnight, everything crumbled. Now, the big thing with this is the way they rated their paper. If you've seen the movie The Big Short, you'll know exactly what I'm saying. Watch that movie and you'll totally understand what I'm talking about. Now, there's people out there that were grading basically really bad mortgages, subprime mortgages, as AAA paper, or they would bundle them together and basically sell them off to the stock market, people's investment firms, your 401k, your hedge funds, pretty much old people's retirement programs. And so now all these people are holding these really bad loans that are not performing, that are worth pretty much half of what they're going to be in the next 4 to 5 years. This was the straw that broke the camel's back when it came to the housing crisis, and everything kind of collapsed. Fast forward to 2021 and 2022, and that's exactly what happened. For some reason, during the pandemic, since a lot of people are out of work, banks decided to take it on themselves to not do job verifications. You can check with Experian, 92% of auto loans issued from 2020 to 2022 did not have income verification or job verification, which is 2 totally different things. Income, we check your bank statements and everything else. We can get your pay stubs, but it doesn't really count. Also, income, they call your job and do all this stuff. So they didn't do 2 of the most major important things to verify that you're an actually employed person making good money. On top of that, we always looked at history. So if you, let's say, made $2,000 during the pandemic, but then all of a sudden with all your stimulus money and your bonuses, you're making $4,000, we still wouldn't sell you a car that you could qualify for $4,000. We would take your previous income and maybe bump it up a few dollars. We wouldn't go crazy. But during the pandemic, banks basically lost their minds. They said, you know what? We're going to go maybe 160, 170% of LTV on subprime borrowers. But then as these cars started selling out, what happened? Dealers couldn't get a hold of certain cars and cars started going up in value. So that 2005 Toyota Corolla that was worth maybe $5,000 is now worth $10,000. So now dealers are saying, I need $10,000 to sell this car or I'm not going to let it go. It's gold. So some banks said, okay, well, we'll go up a little bit higher. We'll go 200% of LTV. But then as these cars started selling, guess what happened? The value of the cars started rising. So now if they did 200% on a $10,000 Toyota Corolla, I'm sure they'll do 200% on a $20,000 Corolla and give somebody $40,000 for maybe a 2012 Corolla. And that's exactly what happened. And slowly but surely, the market got out of control. We saw prices increase faster than we've ever seen before in automotive history. I saw people literally overpaying for economy cars. I've never seen that before. Even when there's something cool, new trendy economy car. I don't know if you guys remember, but back in the day, Kia Souls, when they first came out, a lot of people wanted them and they lost their minds. The last time I saw that was with the PT Cruiser. When the PT Cruiser came out, there was idiots still paying $10,000, $20,000 over MSRP for the Woody editions, believe it or not. Now you can't even, I don't even see those cars. I haven't seen a PT Cruiser in probably 2 years. I don't even think they're even alive anymore because they're just junk. But that's what we saw in the market. We saw people fighting over Kias, Hyundais, and Hondas paying $10,000, $15,000, $20,000 over MSRP. Now, the reason why I'm talking about the update today is because now it's finally hit the mainstream media and they started to talk about it. But still, when I go to these events and other things, nobody's talking about it. Dealers are not worried. They don't care. And I'm like, what are you going to do when your bank stops lending? oh, they're not going to stop lending. The banks always lend. I'm like, no, when they have a certain amount of defaults or a certain amount of deficiencies, they're going to stop. They're going to pull the purse strings and they're going to stop lending. Oh, it's never going to happen. It's never going to happen. And it started to scare me. I started having flashbacks of 2008. I remember my friends that were doing mortgages were literally doing mortgages up to the day that basically on every news channel they were saying that there was something wrong. Not even joking with you guys. Everything is fine. Everything is fine. And right now everybody's listening to the mainstream media. Oh, and yet it's not that bad. And as we talk about this stuff, the hardest thing for me to do is to convey how serious this is. So a lot of banks hide behind the Fair Credit Act. They can't share any information because it's personal information and it's not allowed. But using this as a crutch to hide the true numbers of currently what's going on is mind-boggling. Just like my friend, when he told me that he had people that were investing in mortgages, saw how they were defaulting and how people were walking away from their homes before the fallout, we're seeing it today every time I go rate auto loan portfolio. Now, if you watch The Big Short, you can see people literally, they had a clip where they went to Moody's and Moody's was supposed to give every mortgage a AAA rating, even though it wasn't. So as they started asking, why would you give this AAA if tranches of this mortgage bundle is C paper or D paper or F paper? And they said that's just what they were told to do, to just slap A on it and sell it. And so we're exactly here right now with the auto industry. Every time I go look at an auto loan portfolio, whether it's a buy here, pay here dealer, another bank trying to liquidate some of their paper, my job is to look at the paper, sum everything up, and give it a rating. And I've never seen so much paper out there that was horribly written. Like, we have certain guidelines, every bank does. Everybody has this general idea. If it's an older car, you don't go past a certain amount of months. If it has a certain amount of miles, you charge maybe more interest if they have bad credit. There's always some sort of structure to this. But when I saw people giving 72-month loans on a 2005 Ford F-150 with 200,000 miles because they had to sell it for like $18,900, it blew my mind. People were going nuts during the pandemic. And so now I'm sitting here telling multiple people, banks, dealerships, your portfolio is not what it's worth. All these banks know that they're holding on to a hand grenade and it could explode at any minute. There are tons of people literally walking away from their cars saying, why am I going to pay $60,000, $70,000 for my used Dodge Charger when I can go buy a brand new one now for less than that? And so what do? They go out and buy the Charger, and once they get financed, they just let the other car go. So as we walk through some of these bank lanes, repo lanes, and stuff like this is what we're seeing. And it's very hard, like I said, to get people to believe in some of this stuff. So I will take you guys to some of the auctions. I respect the auctions. I can't really show a whole lot that's in there. There are some YouTubers that will do that. You can see on their channels. But as far as banking goes, as I start looking at this auto loan portfolio, every single month it's getting worse. People that think their portfolio is worth, let's say, $20 million, it's really truly valued around $5.5 million. That's how big of swings we're seeing. And that type of difference is never normal, especially on subprime paper, because a lot of banks like to get subprime paper because of the interest, 15, 20, 30%, depending on what state they're in. And so a lot of banks always want to buy that paper. Now, all my banks that I deal with will not touch any of the subprime paper, and especially in different states. The only places I've been seeing auto loan portfolios still sell pretty quickly is in Texas, because for some reason, Texas is like a different economy. People pay their bills, they're making money, but everywhere else, it's horrible. The Midwest is a little bit better, but it's usually the coastal cities have the worst either buy here, pay here portfolio or the auto loan portfolio. Now, it's kind of crazy because there are more 800 credit scores up and down the coast, and that's another thing that I wanted to talk about was everybody knows that the subprime market's going to default, and we all expect that. But also what they were talking about in The Big Short was the fact that there were so many prime borrowers defaulting as well. And that's exactly what's happening now. Now, in 2019, the average default rate was 2.2% for prime borrowers. After they stopped reporting it back in, I think it was 2023, it got all the way up to 5.9%, which is almost triple. As of today, as looking at some of these bank portfolios and just doing my own numbers, we're hovering somewhere around 6 to 7.5% for prime borrowers, which is almost 5 times the normal rate of deficiencies and delinquencies. So that is a very scary number. If banks are worrying about their prime portfolio going bad, and remember, when it's prime, believe it or not, banks don't like a lot of prime. They make a little bit of money because they charge low interest. The big money is made on the subprime market. That's kind of what balances out the books, that and credit cards. But if their secure loans, which they always think is a good thing, is a sure bet, is steady money, is defaulting, this is what's scaring the banks. And this is what's scaring me as well, is a lot of the people that we saw walking away from their cars, all tier one buyers. A lot of these people weren't even late. They just saw how much their car was worth. I just saw it was a Toyota Camry TRD. The guy owed $30,000 more than what it sold for at auction. Perfectly clean car. I think it had like 8,000 miles, but he went to the dealership, saw the exact same car for probably half the price, went out and bought it, and then just let this one go. And so every week as I'm talking to banks, as we're going to the auction, we're seeing this happen more and more. And the scary thing is if you go to any auction, you could see there's thousands, not hundreds, thousands of cars going every single week. And then if you look in the storage lots, there's even more, because banks know that they have to slowly trickle out these repos, because if they flood the market, the values drop even further. On top of that, every week, a lot of these cars are not selling. They're called no sales. What happens when I bid on a car and it's worth 38,000, I bid 38 and the bank wants 48? It's called a no sale, and it goes back in the line. But every week, these lines are getting longer at the auction. I used to be in and out of the auction during the pandemic, 35, 45 minutes. Today, maybe 2 to 3 hours, and sometimes I remember being at Odessa, I think it was almost 5 hours. I was there all day watching cars go by. And unfortunately, there's a lot of no sales. I'd say somewhere around 45, close to 50%. It got to 50 for a while, but banks started letting stuff go. But I think now that the market continues to slow down and people can't afford these cars and banks are starting to lend, it's going to be a really hard thing, because eventually people just have to let go. And right now it's a battle. They're still thinking the economy's okay. Everybody's believing the news. And I don't know if it's the government propping up the economy, because everything I'm seeing now is bad. People are literally losing their houses, losing their cars. They can't make ends meet. Their insurance has tripled. Gas has tripled. The affordability of buying regular things is ridiculous. Unfortunately, I'm not much of a grocery shopper, but my friends tell me groceries have literally tripled, eggs and milk. So if you're on a fixed budget and, every dollar counts, just imagine if your rent doubled, your insurance doubled, and everything else, how can you afford your car? Do you feed your kids, or do you pay your car payment? Do you pay your insurance, or do you pay your car so you can get to work? So now if you get into an accident or something happens, you lose your car. And these are the things that are facing everyday Americans. Every banker that I talk to literally is going on about how many programs they have to help people that are currently struggling. I recently talked to my bank, which is Navy Federal Credit Union, to ask them, what they're seeing and what they're doing. Unfortunately, they couldn't tell me what they're doing for other people, but I thought I would just ask about my credit card, my car payments, to see what they can do. And there was forbearance programs. They were working with people to lower interests, to pause credit cards, to do all kinds of stuff. So letting me know that banks are willing to put pauses and keep people in their cars instead of repoing them right away means that they're very scared. They don't want to take on all these cars that people can give back. They'd rather pause the payments for a few weeks or months, let people catch up, and then restart them. So the auto loan crisis is getting more real. It's touching mainstream America. And like I said, you're going to see me on a lot of news channels here very shortly. I've already got invited to about 4 interviews, and we're going to start going over a lot of this stuff. But anyways, I'd like to thank you guys so much for watching. Please let me know what you think of the auto loan crisis. Did you know it was this bad? Also, have you heard anything? Is it really quiet in your area? Are you a dealer? Do you hear your bankers talk about it? Do you hear other people talking about it? Are your friends and family losing their cars? Please put in the comment section below. The whole point of this channel is to be transparent about the automotive industry, and everything you share means a lot. And guess what? Even if your opinion is different from mine, that's okay. We could still be friends. And that's it. So I want to thank you guys once again. We'll see you next time. Make sure you like and subscribe if you learned anything. Follow me on Instagram at Lucky Lopez, and we'll see you next time.